Greetings all, Benny Reese West. Time for our weekly look at uranium. Interesting market out there at the moment, isn't it? There's a few things to consider here. So let's jump in this week and have a look. And I'm actually just going to kick off this week. I'm just going to quickly talk about the broader market because obviously at the moment, everything's pretty much hostage to whatever's happening in the broader market. So, the old saying is, the rising tide floats all boats. Well, the ebbing tide can sink them too. So there's a couple of things to consider here with this S&P. I mean, we know that we've had, quite a bad sort of, albeit short, but risk-off event to end out the week during Friday Asia time. And of course, the market just does not know what sort of response we may or may not get over this weekend. And obviously it's not a perfect time to be holding risk if you're a bit conservative. I'd say if you're aggressive, there's a good chance that nothing happens and we'll experience a reasonably strong bounce into the start of next week. But if you're wrong, will heaven help you. So I'm just here to the daily on the futures. So a couple of things to note here. And just when I thought about it, the RSI, this is the futures too. I don't know if I mentioned that already. The RSI doesn't often get this low. It's kind of at maximum downward momentum. That's just all we're saying. All this is saying. But just because it has got maximum downward momentum doesn't necessarily mean there's an imminent bounce coming up. We sort of use this as a gauge of momentum when it starts to diverge. We're making lower lows with less selling pressure. So even though we're low here, it's kind of like it puts you on alert. We don't often get this low. Now, the other thing here too is we can just get a little bit of sort of statistical evidence in here. So we're talking about, this is the 6th day, it would be same for the cash index. This is the 6th day in a row that the S&P is closing down. Now, I just ran the test. I had an old test set up to do this anyway because I think it's always interesting, especially when you get a long stretch in the S&P of down days. You can see here, I've just taken it back to 1950, even though I won't go into it. I don't think the S&P exists as the S&P 500 till 1958. Don't worry about it. But the point being, 18,695 trading days. There's only been 116 times in all that time where we've been down 6 days in a row. Now, to be down 7 days in a row, you're talking about only 46 times. So what I'm getting at is, we're getting pretty close. We're getting into a pretty rich area where we can expect a bounce, at least an up day. All right, now, we're not out of the woods because when you work it out, when the S&P is closed down 6 days in a row, the next day was only up 60% of the time. So, basis of the historical patterns we're seeing, still a 40% chance we get another down day. But as you can see, as the down days run out, we're getting closer and closer to that statistical point where they're going to have to be a bounce. So, I think that sort of keeping that in mind and setting up for Monday makes me think that there's probably a better than, I don't know, of course, but there's probably a better than likely chance that nothing does happen this weekend, that everyone just calms down. And if that's the case, then risk will come back. I mean, we've still got problems with interest rates, but that's a whole nother kettle of fish and incoming rate cuts. We can't deal with that until we get this sort of global tension out of the way. But like I said, I think that might dissipate by Monday, and we're a good chance, I think, now of seeing a bounce, even though there's no evidence there yet. But I just thought I'd bring that up because we don't often get runs this long in the S&P. I think that's the general message here. So just moving over here to CCJ, and we're on the weekly here. Someone asked me that they couldn't see the ticker up in the corner, but just be aware, I always keep this watermark there just to sort of be able to show you sort of what I'm looking at. I think the problem is at the moment that there's a heightened chance. I wouldn't say there's a real chance. There's a heightened chance than there was not so long ago of the uranium sector's potential black swan moment. And to me, when I look at it, it would be a potential black swan moment if one of those two sides, they've both got nuclear sites, if they started attacking and bombing nuclear facilities, then I think we would have a problem. However, it's one of those things you can't really worry about until it actually happens. I think if you were concerned, then maybe looking at buying some puts to hedge your exposure, because I mean, if one of those two sides attacks the other one's nuclear sites and there's a major nuclear incident, well, do you really want to be holding a bunch of uranium stocks? I'm not sure. In the long run it might be fine, but we saw what happened after Fukushima. It could get very ugly very quickly. Nonetheless, like I said, we can only worry about what we've got at the moment, and we can't worry about what ifs. So what we're seeing here at the moment, and ironically, I was doing a video with the Red Devil yesterday when the carnage kicked off, so we had to cut it short because there was a bit of trading to be done. But we are going to once again try to go over this. But just generally speaking, we still have this cup formation on the weekly, and we're still looking for that sort of bear flag handle to form. So it hasn't formed there yet. Or I don't think it has anyway, but it is still out there on the weekly, so it is something to keep an eye on. But just coming in here to a daily, I've sort of been banging on the table for a while that that this was a range and that we were going to have a bit of a range expansion, which we kind of got, but it wasn't perfect. I didn't expect it to be. You can't expect the market to just give you perfection, otherwise it'd be easy to trade. But it kind of looks and feels to me at the moment that we sort of look like we're just sort of finding another little bit of a range here. I mean, we've had a test above it where we sort of came through the top here and squeezed out the breakout traders, and we've kind of had a few goes at this bottom where we've kind of held in, and now we're kind of just sitting there right in the middle. And so what I've found kind of interesting is just when I take the fractal of the old range. So like this, so it's that. When you chuck it on top, it's kind of got a bit of, no, I wouldn't say it's exact, but there's a little bit of similarity there to what happened down here. It's kind of marching to the same beat where we've got the push up like that, and we've also had the little spike down like this. So look, I don't know. To me, this still looks like a mess. I'd still just be thinking about the retracement zones down here, and I think I pointed out this week the gap that down here, that there's a better than likely chance that gets filled. So look, considering what's happened, this has held up pretty well. I still sort of just think that there's going to be a broad range of some description, which will kind of fit into the cup and handle narrative, right, when we talk about this, because then we'd need that sort of bull flag. But I think in my scenario, the market is probably more likely to do this, which would kind of wreck the cup and handle. But that the fact is that this is the formation that's sticking out in your face at the moment, so you can only deal with what you can see right now, because sort of thinking that it might do this, well, I don't know what it's going to do in the future. It's just a hunch. But I don't ignore what's going on right here and now, because that's what we've got best to lean on. So no panic stations. I think you just got to be aware that there's a heightened chance of that black swan event, but I don't think you can worry about it until it actually happens. But yeah, maybe look at some puts for insurance if you're concerned. Otherwise, you just stick with it. Now, I thought I'd just jump over here. The problem with the cup and handle and CCJ is it's not being replicated everywhere. Now, I thought I'd just jump over here because, look, I think you've got to be very watchful of confirmation bias, right? You can't just look at what you want to see because you want a market to do a certain thing. You just got to stay detached from it and think, okay, well, what can I see here? Now, we had the big trend, but this is a little bit concerning to me in this one, is that the way that this has just come in. Often you see it in technical analysis, is that when you've got a really nice trend line like this that held for a long time, once you break it, you come up and touch it from the underside, and that is usually a signal of another failure incoming. Added to that, of course, is that we've just got rejection away from this area. Now, it's not written in stone, but it's a good sign when you can get to the other side of the tracement, I think. But we haven't really maintained And what I was hoping to see more was that idea that the range would, well, that it would expand out a bit more. So if that was the range, that we would come up like, higher. So I was hoping that after we'd sort of bounced around in here that we could get back up to sort of challenge this the way that Cameco did, and maybe hold it before we come back down and test it. But that hasn't eventuated, and this one's just kind of struggled now, right? It's just sort of sitting there. So yeah, I mean, just when you look at it, it's kind of holding its retracement here, but it's not. It looks a little bit undecided and indecisive to me, and the problem that could develop here is simply that we get, now that this has come down here, it's pretty key, because if this sort of slips away and starts to take out that low, well, what have you got? You've got a downtrend. So of course this hasn't come to fruition yet, but yeah, I'm a little bit disappointed that this wasn't able to push a little bit further. But look, you can only deal with what it's giving you, and this is what it's giving us at the moment. It's been a pretty flat week, really. Like, switch this over to a weekly. I mean, I lie. It's down. It was down 5.5% for the week, but it was a heavy week, right? It really was. So, because of what was going on. Nonetheless, this is a little bit disappointing. I will just say it like that. So we wait and see, but we definitely don't want this low to give way without, because this is still not necessarily a downtrend, but it's only a downtrend to me if it actually breaks this and we've got a lower low with a lower high, then the trend is well and truly shifted on it. But look, I still remain hopeful that we will just subsist for a while within a broader range. That is still the hope, but we will see what happens. The physical uranium trust, let's just have a quick look at this. It's the same sort of thing, right? It's a little bit difficult to find too much good to say about it just as it sits, because it's just, to me, like, I'm just disregarding, and we're on a weekly here, I'm just disregarding all the potential fundamental news about it. I'm just looking at it technically, and what does it look like? Well, to me, I mean, this is down 5.4% this week, but to me, it's just a market that has broken a trend, has swung back up, and so far held its retracement, and now is coming off. So, I would look at this and say, well, the odds to me look like it's, just as purely on a technical basis, the odds to me look like that this is going to break. Okay, and if that breaks, what do we set up? Well, I would kind of be looking at, I mean, there's a few points you could probably pull the retracement from, but if you sort of count from mid-July when we really started rallying, or even here where these sort of triple lows were on the weekly, the one-to-one move just lines up right at the bottom of the retracement, and that to me just looks like, well, looks like a classic technical picture of what you'd expect. If this happens, a lot of my theories about what I think is going to happen are going to fall apart. So, maybe this is wrong. Maybe this can get back up there. But I think the one thing is, it's probably fair to pull off here. Really, that's probably the more fair point. So, look, it has retraced quite a bit, this one, and I've just come back down here to the daily to demonstrate that. It's just not definitive, is it? I mean, it's, you could probably kind of make some sort of Wyckoff style arguments through here with a nice spring and then a push away, but this range it hasn't gone on with it. It's kind of annoying. It really is. I mean, do we expand this range? I mean, not really, but it's just, you can see it, right? It's just there, staring you in your face. That there's a bit of a trend there. It just doesn't feel right to me, does it? It's kind of still trending, but it's not. There's not a lot of strength here. It just doesn't feel like there's great direction in this one for the moment. So, look, that would be my worry, that this is just like a like a bear flag almost, and that this is going to come down and do some more damage. But we'll just have to wait and see. But I remain a bit wary here. So just going to come in here quickly just to finish off here with NXE. So this one was the nice strong one where we had this really great trend. Now this sort of, it's fallen out of the trend channel now, so I would kind of just get rid of that for now. What I would do though is I would probably, because this was I mean, yeah, maybe let's just bring that back. This is probably a good exercise of where, you know, trends can be a bit subjective, right? The way you draw them, because the two touches here and the two touches here is what gave it the symmetry and the nice geometry. But you can just see with that example, if I take this pivot off this pivot, then all of a sudden we're resting on what looks like a new potential trend line. So I think at that point, then you say, well, do we redraw this trend channel? Can we take it off this? Well, I mean, you could. I wouldn't call that a channel. I like touches both sides to make the channel, but there's certainly a trend there, and we are just sitting right here on the retracement of the last big swing. So even though we've held in here pretty well, we've just got this sort of doji candle here, but we've closed to the lower side of the range. So the one thing I'm wary of, I'd be looking, this is like, you got to swing down here, you got to swing back up. You can see it made a pivot high, and now we've got to swing back down. We're just in the retracement zone, but we haven't made the one-to-one move, which isn't obviously a prerequisite, but it's only 20 cents away. It's not that far. And I think we're maybe pre-market, we're a little bit weaker than where we shut. So I'd kind of be looking for this next week just to see what happens here. But that, of course, if it does that, then this sort of temporary trend line that we've sort of just put in here would kind of get wrecked. But the fact that we've fallen out of that nice trend channel that we had is just a little bit of a warning shot here. We want this to find its feet to maintain the trend. But like I said, on the bigger picture here, because of where we're sitting, if we can hold this, then we would have quite a nice setup to do that. Okay, but we don't have that as yet. All we have is a few of the ingredients that we would hope to see. But yeah, there's certainly that danger there that we could slip a little bit lower, because whatever I've sort of said and done here, this is after the close on Friday. Well, you know, the world could look a lot different on Monday, or it could just be more of the same, and that is what is going to turn the market and propel it higher. So just be careful. I would just finish up by saying, just make sure that you've planned everything out. You know, just have your disaster scenarios in the back of your mind, so you know what to do. You know how you're going to go about exiting or covering up, or, you know, getting some hedges on, or however you want to manage your risk, whatever's right for you. But I think just be aware that potentially, I just think it's a little bit heightened at the moment, because I think we've got two sides of the coin here, and I'm not sure that the adults are in charge of either of those countries. They both seem a little bit hell bent on just taking it all the way. So I don't know, but you know, I'd just be careful. That's about all I could say. Okay, look, stay safe out there. Have a great weekend, and we will talk again next week. Thanks for watching. See you next time. Bye for now.